Hello and welcome to another video in which we're going to talk about depreciation as it relates to replacement and a non-monetary exchange of asset. So we have an exercise here in which we have a company that has purchased a machine on June 1st, 2018 for $31,000, free on board the place of manufacture, which means the buyer pays for the freight. Freight to the point where it is set up is $200. $500 is expended to install it. All this means is 31,000 plus 200 plus 500 is going to be the original cost of the asset. The machine has a useful life of 10 years and a salvage value of 2,500. On June 1st, 2019, an essential part of the machine is replaced at a cost of 2,500, at a cost of 1980. And this is designed to reduce the cost of operating the machine. The cost of the old part and related depreciation cannot be determined with any accuracy. So what we have over here is the asset has been purchased, used for one full year, and then at the start of the second year, one part of the asset, just a part of the asset has been replaced. We don't know the cost of that asset that is replaced, so we just capitalize the cost of the new part that is purchased. We'll see how to do that in a minute. Let's continue reading. On June 1st, 2022, this is now 3 years later, the company buys a new machine of greater capacity for $35,000, delivered trading in the old machine, which has a fair value and trade-in allowance of $20,000. So we're not paying $35,000, we're getting a trade-in allowance of $20,000. To prepare the old machine for removal from the plant, a cost of $75 is incurred, and the expenditures to install the new asset, $1,500 is incurred. So I'm paying $75 to remove the old machine, and when I get the new machine, I'm paying another $1,500 to have it installed. The useful life is 10 years, and the salvage value is $4,000. This is for the new asset. The exchange has commercial substance, which means any gains or losses have to be recognized immediately upon this exchange. They've told us that we're using the straight line method. They want us to calculate the annual depreciation for the new machine that should be provided in the year beginning June 1st, 2022. So I need to go through the process of seeing how the old asset was treated and the accounting that was done before I can get to the new asset. So let's start out with some very basic information over here. The purchase date of the first asset is June 1st, 2019. The three pieces of information I need over here are the purchase price, freight cost, and installation cost. All this is to arrive at the original cost of the asset. We already decided that is $31,000 plus 200 plus 500. So that gives me a total of $31,700. I will need this number later and I'll come back to that again. The estimated life of this asset at this point of time, we said is 10 years, and we said the salvage value is $2,500. So we're going to do two journal entries over here in the first year. The first journal entry is for the acquisition. The total cost is $31,700. So I'm going to do one journal entry over here, and the journal entry is going to be machine debit, cash credit for $31,700. We also how I came up with that number, 31,700. At the end of the year, now the fiscal year ends on May 31st, 2019. We do the entry for depreciation. We know which accounts to debit and credit. Depreciation debit, accumulated depreciation credit. It's 31,700 minus 2,500 divided by 10. Original cost minus salvage value divided by the estimated life. So my depreciation expense in the first year is $2,920. Then on June 1st, 2019, that is exactly 1 year after I made that purchase, I have spent money again. And the money I spent was for replacing a part. This replacement of part, I already told you, the way we're going to work with this is we just treat it as a addition to the asset. So machine debit, cash credit. Now the original cost of our asset is these two numbers put together. That's the new original cost of the asset. But to calculate depreciation expense moving forward, that is for the second year, the depreciation expense, I need to recalculate the depreciation base. Anytime we have any kind of change, I need to calculate the carrying value of the asset at the point I'm making a change. The change I'm making over here is I'm replacing a part. The original cost was $31,700. I have depreciated it once, $29,20. So the carrying value is going to be the difference between the two. $31,700 original cost minus accumulated depreciation gives me the carrying value of $28,780. I add to that the cost of the replacement. The cost of replacement is $19.80. That now gives me the new carrying value or the new depreciation base. What happens to the life of the asset and the salvage value? Does that change? Well, salvage value stays the same at $2,500. The life is also the same, but now what I'm concerned with is the remaining life of the asset. How much life is remaining? 1 year is already gone by. So the remaining life of the asset is 9 years. That's the change. So from 10, it drops down to 9. That's because that's a remaining life. The total life has not changed. Salvage value stays the same. So now I recalculate depreciation expense as $30,760 minus $2,500 divided by 9. That gives me my new depreciation expense for the next 9 years, assuming I keep the asset for 9 full years. Okay. We know that 3 years later, we traded this machine for another one. So before I can do the journal entry for trading the machine, I need to gather some information. So the information I need is starting with the date that I'm working this on. This is on June 1st, 2022. It's 3 years since the last, I've depreciated it 3 more times, okay? The original cost of the asset, I'm gonna highlight this so we know where these numbers are coming from. 31,700 plus 1960. When you add these two numbers, the original cost of your asset is 33,680. You're adding these two numbers to come up with the original cost of the asset. Subtract your accumulated depreciation. Accumulated depreciation, I depreciated the asset over here once, so let me change the color. And then I depreciated it again, not just once, but 3 times, because look at the dates. From May 31st, 2020 to June 1st, 2022, I've depreciated it 3 times. So 2920 plus 3140 times 3 is the total accumulated depreciation. And that's 12,340, leaving me with a carrying value of 21,340. So basically I'm saying in my books, my asset is worth 21,340. What if they told me, I'm buying this asset which is worth 35,000, they're giving me a trade-in of only $20,000. So I'm out of luck over here. What does it mean? It means I have a loss when I exchanged it. When I did the non-monetary exchange, my trade-in value is less than the carrying value. How much less is it? 1340. The carrying value minus trade-in value or the fair value is the loss. And I also paid another $75 to have this asset removed. So the total loss I have is $1,415. So the carrying value is more than the fair value, the trade-in value, and I paid $75. So this is my total loss. So let me do the journal entry to bring the asset into my books. So the journal entry on June 1st, 2020, I'm bringing the new asset into my books. I'm taking out the old asset from my books, so I need to take out the accumulated depreciation as well. So the old asset, the original cost is this 33,680. That's where I'm going to put that number again. So to show you where that number is, that's 33,680. Accumulated depreciation, I know that number is 12,340. That number over here is 12,340. So let me put that in the same color so you can see that. 12,340. Okay. I identified my loss to be loss on exchange, 1,415 So I write that number over here, loss on exchange. Okay. I paid cash. How much cash should I pay in all? Okay. The total cash I paid is $16,575. How did I come up with this number? 35,000 is the value of the asset. The trade-in value they said was 20, which means they said I have to pay 15,000. I paid another 1,500 for installation, and that's $75 to have the asset removed, the old asset removed. So the total cash outflow is 16,575. I've combined all of that and put it in one, just as one number over here. So now that I have this in place, my plug number, the balancing figure, is the new asset. So I'm going to write this over here that this is the balancing figure in my journal entry. The balancing figure is 36,500. 36,500. So it's that the number that we have over here. Okay, we are looking at all of these numbers put together when we come up with a final 36,500. 35,000 plus the 1,500 for the installation. 36,500. That's a new figure for the machine. Okay. Now that we have this done, we are ready to do our last bit, which is what they asked us for, to calculate the depreciation expense beginning June 1st, 2022. So we are looking at May 31st, 2023. Okay, because the year end is on it comes into the next calendar year. The journal entry, as you know, is depreciation expense debit, accumulated depreciation credit. What I need over here again is the new machine. What's that number for the new machine? Date of purchase is June 1st, 2022. The original cost of the asset, we identify that number to be 36,000. The salvage value is 4,000 and life is 10 years. So 36,000. So finally, to arrive at the number that they want us to calculate, we needed these three numbers. Okay, so these were the numbers that we needed. The original cost of the asset, and that number I got from here, 36,500. Life of the asset is 10 years. Salvage value is 4,000, and that gives me 3,250 is the final number. Okay, so in this case, we could have guessed and come up with that same answer, but in a lot of cases, that's not true, depending on what else happens over here and the various numbers that are in play over here as you've seen these calculations. In either case, we've seen how to arrive at the final answer, but the process of arriving at that final answer is also important because very often we are asked for numbers somewhere in between over here, if not to work through the entire problem. So this is the last video we have here dealing with depreciation. We'll move on to the next topic in the next video.